this. But Mike, you said you were recording it. I want to get it from the beginning, so I'm gonna record
Yeah, I
it
got
from
you, bro. I'll send it to you as soon as it's done. I'll email it to you or something.
okay, cool. Let me mute this. So as I was saying, like this is the seed to flower concept. And like I said, you consider your flower, consider that flower like, you plant the seed in the soil, right? But you have to go through the soil to get the root. You got to go through the soil to get the stem. And once you get the stem, you got to get the leaves. Once you get the leaves, you got to get the petals. In order to become that flower or get that flower, you got to take that whole process, right? You can't just say, uh, I'm going from seed to rose petal. You can't do that. And everybody wants you to put this vision board in front of you so you can see the roses. So you can see the rose, right? So you can see that at one point in my life or one point in my trading career, I'll become that flower. But you don't you don't understand the fact. So you're focusing on only becoming that flower, right? And there's nothing wrong with that. You need to have that too, but you need to also focus on what's keeping you from being that flower at the point you are right now. What are the things that are stacked on top of you right now that are keeping you, the seed, from growing into the flower, right? Where's the dirt? Where's the soil? What's the soil, right? So for me, I'm going to use myself as an example, right? As great as a trader as I am, I know the things that are keeping me from being where I want to be as a, multimillionaire trader, right? I know I have an issue with impulse. Like I have an issue uh with being impulsive, right? And staying disciplined, right? Those are my two biggest issues, even to this day, right? And as great as a trader as I am, there are some days when I will literally just click the button, right? And I will, and on those days, when I am impulsive, it makes me, it's like a a follow through effects, right? I become impulsive. I become I lack discipline on those days. I throw away my risk management strategies. Like those are days when I have to, I don't. There's some days I will not even analyze the charts. I'll see something, I'll think I see it, I won't even analyze it, and I'll just hit buy or sell. Then on those same days, I'll stay in those trades because now I finally analyzed the chart after I'm in the chart, in the trade, and now I starts making up stuff in my head about what I see on the chart. And then I'll say, oh, I'm just gonna add on to this. There goes my risk management. There goes my discipline, right? Then I'll say, okay, now that I'm in this trade, it should come back to here. All this stuff is stuff that I should have done before that, right? And this is something that I have to conquer, right? I have to be able to get past this impulsive issue that leads me to a discipline issue that leads me to a risk management issue. All of these things that I recognize, right? I have to analyze those things and tackle those things, right? That's the soil, right? That's the dirt that's on top of you. That before you get, as a seed right now, we're all seeds. As this seed we are right now, in order for us to get to the flowers that we're trying to get to, we got to tackle the dirt, fam. We have to take those things and approach those things just like we approaching the flower, right? We have to take and analyze ourselves to see like what are the things that's causing us to not be able to reach that flower or reach that area? Like, what are the things we need to apply the same amount of pressure, the same amount of discipline, and the same amount of focus as we do on the things that are what we want and what we need and what we see in our future, as we do the things that are keeping us away from those things. And we have to always reevaluate. Like I told Chin and Trees today, you need to see the things that you want in front of your eyes and the things that's keeping you away from it in front of your eyes every single day. So if you got a vision board, you need to put up another board in front of you with the things that are keeping you away from this vision board. Everything you got on there, the house, the car, um, the 6 figures, 7 figures, right? Um, the 8-figure business, right? The chairman, if you want to be chairman 10, what's actually keeping you away from it? Is it patience? Is it discipline? Is it technicals? Is it sleep? Like Carlos and he says, is it sleep? What is keeping you away from it? You need to have those things in front of your eyes, just like you got your vision board. And as you see those, you need to be able to look up every single day and see, all right, I need to work on my impulsive behavior today. I need to work on my discipline today. I need to work on my risk management today. And you need to treat those things like you need to go at these things the same way you go after your flowers, because you can't become the flower if you don't get through the dirt. The dirt is what's keeping you from being a flower, right? And then the next thing is the way you approach these things, right? That's the next level. That's the next thing. After you recognize what the soil is, you recognize what the dirt is, you recognize what's keeping you as the seed from reaching the flower, you have to know how to handle these issues, right? You need to take those issues and treat them as if they have disrespected you, right? Treat those things, treat the soil as if it has talked about your mama, treat it like they've talked about your kids, like they slapped one of your kids, like they've gone through and, burnt your house down. And now all you want is take your vengeance out on them. Like, you need to destroy those things. Like, it needs to be offensive to you, me, everybody on this call. It needs to be offensive that you still got these problems. If you impulsive, you need to wake up and look at that board, your soul board, your soil board, and say, I hate you. I hate the impulse. I hate the impatience. I hate the lack of discipline. And you need to go after those, and like with the most ferocity. Like, you need to like go on this like you're a pack of hyenas, like going after your food. You know what I'm saying? Like, you have to attack those things to the point where if you see those words, right, it should bring some kind of emotional attachment to you of like hatred almost, where you go after that and you just want to just completely destroy that. Because if you're a seed, that's how a seed treats the dirt to get to the flower. It goes through it. It destroys the dirt around it. And it might be the dirt is all around the root now and the stem, but eventually it pushes through it, right? And you get to those houses, those cars, those family trips, those trips and travels that you guys want to do, that 6 figures, that 7 figures, that chairman. You got to apply this to all of your issues, personally, trading wise, anything that you're going through, right? Whether it's relationship issues, right? This can be something, you need to learn how to apply this to everything that you got going on with your life, You know what I'm saying? And you know, trading always show you something about yourself that you didn't know you had an issue with, right? And we have to always evaluate as a trader, because we focus on mindset so much, how do we continually improve ourselves? Because we can't be distracted when we trading, right? If you are, you know, a person that struggles with relationships, right? You know, don't always say that it's the other person. Like what issues that you have, what soil do you have on top of you that's keeping you from that relationship that you want? If you are trying to get a promotion, right, and you're the seed, what's keeping you away from that promotion, right? Are you coming into work all the time late? Are you only are you falling asleep on meetings, right? Are you the person that's doing only 70% effort and trying to get 100% job pay increase, right? What is it, right? What are you doing that's keeping you away from this stuff, right? And then, you know, another thing for me personally, right? Um, one another issue that I've had to deal with and I've dealt with. I told y'all this before. When I lost my grandmother, right? I lost my why. That was my why, right? When when she passed away, that was one of the huge, that was my driving force. And it wasn't till recently, and this is within a couple of months, right? Past, so within months, that I realized, right, I was trading without that why. So that's another, for me, that I realized, like, that's another issue that I have, right? I have to attack that. I need to find out, like, why am I doing this? What else? What's my why? What's gonna drive me? Because it's down times for everybody. So, you know, aside from my impulsive issues, which lead to my lack of discipline, which leads to my risk management issues, I have an issue with my why now. So now that I know these four things right here, I need to take those, put them right next to my vision board, right? These need to go up there right next to my vision board, and I need to attack those things, and I need to resolve those things, and I need to constantly, constantly go after a resolution for these issues, because we don't get to take, we don't get to jump steps, right? We don't get to go from one day I don't know how to trade to now I'm $1 million trader. It just don't happen like that. And see, the thing is, with a lot of you guys, I literally know for a fact the majority of y'all know how to technically trade without a doubt. Like, so it's not that you have an issue with finding a trade or getting into a trade, exiting a trade. Majority of y'all know how to do this. It's some of you guys I trust to take y'all trades without even looking at them. And you guys are struggling because it's not what you know technically that's the issue. It's your mindset, right? And I think that's why we always focus on this, but it's been, everybody wants you to see the end of the road without you even seeing the stop sign in front of you. You can't do it. You can't skip. So so I hope that you guys take it, you know, I hope this resonated with you guys, because I promise you, like, it's like it would, when I recognized this a few weeks back, you know, which I'm so glad that I had some time to get away, not look at the charts, and you know, just read, and you know, audio books, all that kind of stuff. And you know, this is what came out of that, right? And I hope that you guys take advantage of what we just talked about. So now I'm gonna go ahead and get into the questions. So sorry that took a little longer than I thought. Um,
It
but
was amazing.
I just want you guys, like, recognize what the issues are. One, once you recognize those issues, focus on what's the resolve. 2, 3, put these issues right next to your vision board. 4, attack these issues. Treat them as if they are your enemies, because they are. They are your enemies. These issues are your enemies. They're keeping you from everything you want, everything you need, everything your family need. These things are disrespecting you. They hate you. They are taunting you, like they're bullying you, like all of these things that once you realize what they are, these are the things that you need to go after and destroy, right? So those are the 4 notes I want to touch on. All right. So
Corey, you mentioned a audio book that you was listening to that was really good, that you was thinking about suggesting to the team. What was that called again?
the chimp paradox. The chimp paradox.
Thank you.
Yep. So we're gonna get into the questions now. Khalil got the first one. Show me how to determine the order block levels on indices and parts. I have a video that I went over that goes over recognizing order blocks very, very well. I'm gonna do a quick rundown of that, and then I am also going to send you guys the excerpts from that. So let me do that first. I will send you guys the recording of that. It's already on YouTube. So this is bullish market. This is bearish market. And this has an example for you guys. And then this is the YouTube. All I ask you for this is you just like and subscribe to the YouTube channel. But I'll go over it really quick though. Let's open up the how-to session chart. Let's use this one. Great, it's already up, right? So I must have done this not too long ago, right? So when you're looking at order blocks, right? And what we're looking at is like a common Elliott wave pattern, because essentially that's what it is, right? And the way you want to look at order blocks is the levels where the institutions place orders, right? And in order for a institution to take a buy or sell, it has to entice buyers and sellers in the opposite direction of whatever they're trading. So when you are looking at a trade, right, and an institutional trade, you have to think and understand like there are millions and probably billions of orders that are going through it simultaneously, right? I can't be the bank and say, oh, randomly on this chart right here, I'm going to put in 1 billion orders or 1 million orders, right? You don't have enough liquidity in the market in order to do that, right? So what the banks have to do is they have to piecemeal their orders, right? And that's what these order blocks are a sign of, right? So if I want to go up, I got to push the market down in order to buy those orders that I just trick people into entering, right? So if I want to say here in this area, right, I am at a high right here, but I want the market to go down, right? And you can see the traces of it right here. They pushed the market down right here. They bought the orders right here. Price came back up near the high. They pushed the market down. Then they bought the orders right here. They pushed the market down. Then they bought the orders right here. And they pushed the market down one last time. And then they bought it and sent the market in the direction that it intended for it to go into. That's essentially what an order block is, right? That's the logic behind why order blocks are needed and how it looks. Even over here, right? It got to a high. They want the market to go down, but it just couldn't go down immediately, right? So they pushed the market down, then they bought these up. I'm sorry, they pushed it to a high. They gave you the idea that it was going to sell when they sent it down, right? So people started to buy here, they sold it down again. People started to buy here, they sold it down again. Repeat it until they got it to the area where they got all of their orders filled. Then they placed their sale and sent the market back down, back to an area where they bought it from previously and sent the market up. The signs that you want to look for, right? You in a bullish market, you want to consider when an order block is formed during London and during New York. Those are your key levels. Those are your levels that you want to pay attention for, and your time frame you want to pay attention to, because those are usually associated with volume, momentum at those areas, right? So you know there's a lot of traders, a lot of orders going in during those times. So you'll get order blocks outside of those times, but the ones that are created in those time frames are usually the ones that have the most significance, right? So that's one thing, right? And then you want to determine the levels within the order block, the high, the low, the medium of that order block, right? And what that looks like is this. So we have this level right here. This would be what's considered a bearish order block right here. We know that on the 4 hour, this is the last up move before we got this drop and this drop are associated with this order block. If we take our fibs out, I'm going to measure this. We can see there are 3 key levels inside of this order block. There's some stuff going on up here that I can discuss on a lower time frame, but we'll just focus on this. This is the last up move before this, pretty much this down move happened right here. You got your high, your middle, and your low. And we had a move that happened. We never had price come up to the high, but we did have price come to the middle, and we had price come to the low, right? As we see this, right, let me zoom in. We can just say that this reacted to the high, right? We had a trade here. 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 Each of these areas and are levels based off of this order block that we could have took high risk reward trades from, right? And when you see these levels, let me explain to you how you recognize them, right? In a bullish market, if there's structure, right? Once you see a high been made, then you see a retracement, and you see that the high has been taken out, like this area right here. So by this, looking at this example, we left structure, we created a high, we retraced, and then we took the high out over here. Once we see that this high is taken out, this area becomes a potential area for order block. And we see price return to it and take that high out that was created here. This area now becomes a potential area for order block until we reach the levels that have fulfilled the order or let me mute this person, or the levels that they've reached that they intended for price to go to. In a bearish market, you see price ranging. You see that the low of the range being taken out. We create another low. The previous area of structure becomes a potential order block here, right? Then the next low is taken out. This area becomes an order block right here. And then we have our move. And I can show you this on the chart. So here is our area of structure, right? We left the high. We traded out of the high right here, made another high, right? We return price, right? Back to this area. We did pierce out of it, but that's because we actually responded to another order block right here. This would have been, and then this is an even smaller one, right? Price left structure, bounced back off of it. This high got taken out right here, right? This area from here to here became a potential order block, and we traded from it. So let's give a better example, right? Let me draw it out. I'm gonna draw it out. This is your structure. These are your highs right here. Once you see price leave this area of structure and take out this high or the highest high within this area, we'll just say this is our high. This last down move or the biggest down move within this range becomes your order block. Let's give an even more probable example. So this may have been the biggest down move. This is going to be your order block. There may be another order block that was entered here, right? It is one that can be used, but you want to consider the largest down move within where you're going to get your high, middle, and low right here. Then you want to see within this order block, where is price going to come back to? Is it going to come to the high, the middle, or the low? That's where you're going to look for price to return to, right? Is price going to return to the high, the medium, or the low? And as long as it doesn't take this order block out, you still look for the trade to go into the intended direction to the upside. This is exactly how that model looks like, right? You have your order block. These are smaller order blocks within this because your order block can cascade. There can be stacks of order blocks and it can react to either one of them. But let's say price traded down to here, to this order block. You would still be in the middle of this order block. If price only traded to here, you would be looking for price at the high, at the middle, or at the low. And you still would have got this trade right here, or you would have gotten this trade right there for low drawdown, high risk reward, right? Because you want to be able to get in these trades where you have the highest probability with the lowest drawdown with the highest risk reward. This is what a bullish example would look like. Bullish order block. It would be the opposite for a bearish, right? So you have your move, right? you're gonna have price leave this area. And now you want to see where price returns to, right? And then you want to see the move happen from there, right? So just like in the example before, you want to find the biggest move within this range, right? Let's draw this a little different. Okay. You got your lows right here. You got your high right here. And now, where's your order block? This could be one right here. This could be one right here. This could be one right here, right? But once it's said and done, you're looking for the biggest up move within this range, right? Which in our case, we're looking at this low to this high. That's the last big up move in this range, right? We could take a trade from near the high right here, the middle, or the low. That's our primary areas. Then we had this up move in this range right here to here. This is the last up move right here. We would have had trades coming off of this area. We would have had trades coming off of this area. And then we would have had trades coming off of this low. So you had 1, 2, 3 opportunities to jump in this trade based off of this order block from the high, middle, and low of this order block. Then another set of trades coming off the high, low, and middle of this order block for us to retrace back to this area and then get a high probability entry with little drawdown, high risk reward. This is a bearish model. You guys understand?
Yes, yes, sir.
Clear?
Excellent explanation. Yep.
Okay.
Does it matter what time frame you're doing this on? Does it matter?
It doesn't matter because you can get these on any time frame, but I prefer the 4-hour and the daily. Those are the strongest levels, right? I'm gonna show you why. Show you why right now.
Hey, I'm gonna pull up to my house in like 5-10 minutes, and I'm gonna ask if I can share my screen after you're done with the questions and go over some. I think I had an order block 2 days ago that I really should have took a play off of, but I didn't.
Okay, no problem. So we see this area right here. This is our order block in this area. You can see the high. You could probably see it better on the daily. Let's look at it on the daily. This is a daily order block right here. This whole down move right here. We can even go back as far as here and we can see that this is an order block too. But this is the most recent one, right? Where we got the high to low right here. And we had price create the down move. Then we traded out of it right here. Once you see the price, here's the main thing. If you're in a bullish market, once you see a high taken out, that should be light bulb. Ding, 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 ding. This is a potential order block. This is a potential order block. In a bearish move, once you see a low taken out, it should be ding, 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 ding. This is a potential order block. Then once you see that high taken out or that low taken out, find the last up move in a bearish market and the last down move in a bullish market. And that's where you're going to look for price to return to. You see, we made this low. I mean, we made this high over here on a lower time frame. Then we traded out of it. Then we made this low. Then we trade out of that. Ding, ding, ding. Price just made this last down move. We made a new high. We traded right back almost down to the 50% of this order block, and then we took off. Then on a smaller time frame, right? We had this little structure, right? You could have took some scalps out of this order block over here. We made a down move, a down move, a down move. Here's the order block on a lower time frame. I'm drawing it on a daily, but on a lower time frame, this is the smaller order block. You had a trade right here to push up. Then it dropped, but you still could have took that, right? Overall, though, price came down to the high of this order block right here. Took a trade. Here's your low risk trade right here. Wicked off of it and immediately ran, right? Then it came back. It dug deeper into it, about the 50% right here. There's your wick entry over here for this little trade right here. Now, if we reverse this and look at, now it's turning bearish up here at the top. Here is your first up move right here. This little area right here. Let's get rid of some of this stuff. Now we starting to turn bullish. I mean bearish, right? Let me get rid of this. Now these are bullish examples over here. The bearish example come in once we see this up move right here. We see it get taken out over here, make a new low. Now this has to be light bulb right here. Once we see that this high made this lower high, made this low, it was taken out right here. Now we have to recognize that this area is an order block. Once we see price come back to that, let me do one thing. Let's move this on the left. We see we had our last up move. Then we see last up move right here. We see price trade below it, make another low right here. Now we look for price to return to it. Anywhere inside of this order block up into the high, we took out the middle right here. This is our trade right here. If we miss that, we got the wicks. If we get this, we got the wicks. If we miss that, we know we got the low. There's that trade. One entry with little to no drawdown, another entry, little to no drawdown. And then we even came back and got it again over here. So for 1, 2, 3 setups off of this one order block, right? This is a bearish example, right? Then guess what? We got one up move here. We missed that one. We missed all of those trades I just showed you. Here's the last up move before this low got taken out. Right here, from this high to this low, right? You had this trade right here. You missed that, cool. You got this trade right here. That's 2 more trades. So right now, we would have looking at 1, 2, 3, 4, 5, 6, 7 setups off of this order block right here and off of this order block right here. Again, you see this order block, we had the last up move right here. We had price trade below the low and make a new low right here. Then we had price return to the order block right here. And then we had the next leg down. Same example as these right here. Same example. Let me put a little more text on this so that you can get it again. High made. High taken out in this impulse move. High made right here. Impulse down, you waiting for price. You waiting for price to return to the order block with this move down right here. This last move right here. This move down is the sell to buy move, right? We selling in order to get this buy. That's what we talk about when we talk about sell to buy. We are in a bullish market and we selling to get this buy right here. Entry at the order block. Entry at the order block, right? And then you know, here's where here's where your fibs come into play. Once you see that you got the impulse, this high was made, this impulse took it out, new high made, this is where your fibs go. You want to measure the low to the high. And you get your targets like this. You know, once you get your entry here, right? You take your fibs and your first target is 0. Next target, -127. Next target, -68. You should at least get this target. You should at least get this target, this target, this target. But your overall goal is to get the 100 out of this trade. That's how somebody else asked the question. Let me see. Somebody, I think Khalil asked, turn around and bought at a point. How do you get comfortable with managing your entry? Yep, this is how you get comfortable with managing your entry right here. You know and understand, right, that especially if you take this entry, right, you know and understand that if I'm taking this entry at an order block, I know I should at least be able to get 0. I should at least be able to get -27 and -68. And each time, you know, from this area, I'm trading out of this structure. Once you hit 0, you know, I'm trading out of this structure to here. As far as managing your trailing stop, right? I typically wait for my 0 to get hit, or if I'm at 100 to 100, at 50 to 100 pips in profit, I don't move my stop loss until then, right? Because I know that if I hit 100 out of this trade, there's probably going to be a chance that I retrace, consolidate before I get to 27. I'll show you on the chart again, right? last up move. This is your area. This is where we entered, right? This candle took it out. This little candle pushed it up. This, if we measure this little move, we're gonna get this area right here. Watch. High to low. This low took it out right here. Look at where our 100 is. Spot on. So when you're like, how do we manage this, right? Here is our swing down, right? This is our order block. This is our low getting taken out right here. This is our entry. We entered right here a little early and over here. This gave us the whole move. And it told us right where we were looking back. And then to answer another question, another question that was brought up. How do you plan on staying in trades longer? This is exactly how, right? Once we traded back up here, we took this low out over here and over here, and we made our retracement back up. We need to trade to zero. Then after we trade to zero, we know we trade to -1, -2.7. There's your -2.7 target. Then after that, we know we trade into 618 negative. There's our 618. Then we know we want to take out the 100. We trade it all the way back down to this. On a lower time frame, look at where we are. We made a high right here. We made a low right here. High got taken out over here. This became an order block right here. This whole down move became an order block. You can see it better on the higher time frames. There's your high, there's your middle, there's your low. Let's go to the 1 hour. I think you can see it better on the 1 hour right here. This whole thing, might be able to see it on the 4 hour, see it on the 4 hour. This is your order block right here, right? But we're gonna look at it on the 15-minute. Price came all the way down to this, right? Here's your high of the order block. There's your first target getting taken out near this. Then it pushed down even further. Here's your middle. The middle of your order block is 43.67. Look at where we got this huge wick from right here, right at the 50% of the order block. And we traded even below it. We responded to this last little order block right here as well. Came to the high, middle, low, bounced off of this, and we reversed. This is like textbook what you want to look for right here. Textbook. So I hope you guys got that. Can everybody understand?
Yes.
Yes.
Everybody got it? If you understood that, can we drop some sevens in the chat?
And Corey, and while they're dropping those sevens, can I see your fib for your order block fib so I can take a screenshot of it, the inside of it, the setting?
So I'll show you. I have like 3 different fib settings. Let me go back to the other one. So here, you guys should get a screenshot of this. Oh, let me draw this up. So now we're looking for low mate, low mate here. Low taken out with this impulse move. And now here, you're looking for price to return to the bearish order block and hit your targets and go from there, right? And then if we're looking at where price could potentially go, let's go to this field. And we're saying here, we should at least get this target, right? We have price return, right? Once the low was made, we have price return to our levels, get our entry. We at least got the 0, we at least got the 27, and we came at least to negative 618. So I'm going to give this to you guys right here, screenshot this. Who's confused? Who's confused? Okay, nobody. All right, cool. So the fib levels that I use, right? I have the order block fibs. That's this one. Order block fibs, that's this one. Then I have trade entry fibs, that's this one right here. And then I have the traditional fibs that are here. These are traditional fibs right here. And the order block fibs, all I need is 0, the 50, and the 100. That's all this is right here. And there's nothing special about this one. If you want to create these different ones, you can just go to template and then save as, and then give it a name. But you're gonna make all the adjustments to it first inside of here. Then this one is my entry fibs. These are the levels for that. Get you a screenshot of this. And then these are what I would call supply and demand fibs right here. Yep. Okay, so get you a screenshot on here. I'll go over that again. So that's supply and demand. I just gave you that one. This is the entry fibs right here. Screenshot that one. And then this is the order block fields right here. When I'm looking for the high, mid, and low of the order block, that's when I'm going to use this one. When I'm looking for entries, this is, and measuring impulse, this is when I want to use this one. When I'm looking for supply and demand, this is the one I'm going to use for it right here. That's why I got those. Okay. All right, cool. So I think I answered like 5 of the questions already on this one. This
Yeah, I
one
think you covered all of mine, bro. I really appreciate it. Great explanation.
all right. Now let's see. I think Khalil, I think I answered all of your questions, right?
Yep, that's what I was just saying, and did it excellent. Thank you.
And a couple of others. So Anna, when you get near entry and there is a weekly or daily opening, should you wait for price to enter those trades? You absolutely should. Absolutely should do that. Let me give you that example. So we'll go back to SPX. So give a couple of examples. So if we looking at this, right? If we had been looking for this buy right here, right? Price traded down to an order block. And inside of that order block, we had the weekly. And at the time, we had the daily opening price. Let me mark that off. Let me hide some of these indicators right quick so you can see a little better. I don't need that. Okay, so this is the weekly open. This is today's opening price, which we already opened up for. So I got to get the daily opening price. The daily opening was here. This was yesterday's opening price. Right.
Yes. Yes.
Right?
Mm-hmm.
And let's mark that. All right. So we got the daily and we got the weekly, right? And the way you want to look at these, right, is you see the weekly, there's an order block near that, another one right here, another one right here. That's this daily opening price, right? But the next time we trade it back to the daily or the weekly opening, what happened right here? We got an impulse off of this. We came back to it. We played around right here, played around right here, played around right here, got another move down off of this area right here. What happened when we came back to it? We had an impulse up from there. What happened when we came back to it right here? We had a price play around, but it eventually bounced off of that. That's kind of how you want to look at daily, weekly, monthly, yearly opening prices, because there are levels that will determine whether or not price is positive or negative for a given time frame, right? And they're like naturally strong levels of support and resistance, right? You got to look at these more important. These got to become more important to you guys because they are like levels where there's going to be an order block. There's going to be key structure. There's going to be huge moves that come off of these levels. And there are probably going to be levels where you can get into longer term trades, right? Let's go back and look at some of the weeks before, right? Now, let me look at a calendar so I can see this. Last week, was the 5th through the 9th, right? So the 5th is here, the 9th here, right? The weekly opening price was, let's go to the 1 hour chart so we can see this a little better. So we go into the 5th. And I want you guys to see this. The 5th was here. So actually it was this is the opening price. This is Sunday going into Monday right here. So your opening price would have been right here to the 9th, right here. This is your weekly opening price. Right here, right? So now we had some huge moves that happened off of this one particular level, right? If we look at the rest of this week, right? So we had Sunday, Monday to here. It hung around the opening price. Into Tuesday, it hung around the opening price until this move right here. This gave you a move that was altogether 400 pips, right? Look where it came back to, order block. Where is this order block? This order block is sitting right on the monthly.
Right.
This is the monthly opening price. There's an order block right here. Price came to the high. Watch this. High, order block. The monthly opening price is right here in the middle of this. Here is your high. Here is your trade. Right here, there's your buy. It left, it dropped from the weekly opening price to the monthly area, order block, bounced right back off of that.
Mm-hmm.
It traded back to the weekly opening price, tried to close above it and push up. Eventually it falls and destroys that order block, right?
Yeah.
And we have a move that's all together from here to here. That's 746 pips, right?
Mm-hmm.
And that went from the weekly opening to the monthly,
Yeah.
weekly to monthly, right?
Right.
This order block is right at the monthly, but if we look further, do we have anything else? No. We had another little order block right here, a little small one, right? Here's one right here, right?
Mm-hmm.
We had this trade right here come off of that. It even went to the middle, come off of this.
Yeah.
All of this near the monthly opening price right here, within 20 points, 20 to 30 point range of the monthly opening price. Then once we got this trade right here, price did what? It took out this little low on the lower time frame, made a high. Once we made that high, where is the last down move? This candle right here, price came right back down to it, right? Look at the fibs. Oops. Check your fibs out, right? I'm gonna hide this. I'll just draw it again. Here's your low. Here's that high that was made right here. Price came back to this order block right here, which is right near the monthly, which is also where this move came from. Monthly, monthly. There's your entry right here. You get your entry. The first thing it does, it trades to 0 right here. Next thing it does, it trades to negative 127 right here. The
Yeah.
next thing it does, it trades to negative 618 right here. The next thing it does, it trades to 100.
Mhm.
All your levels hit right there on this trade. All of your levels, right?
Yeah.
Now you look at this down move right here. This was an institutional move, right?
Mhm.
So now you got to look at, okay, cool. This high was taken out once we broke above here and we made this impulse. We got to look for price to come back to here,
This place. Yeah.
right?
Yeah.
Let me remove this. This down move right here, looking at this whole move from here to here, price should come back to our order block, which is now
This.
here
Mhm.
to here, right?
Yeah.
Order block field right here. You also have the golden areas, 618, 70, 78 as an additional confirmation. You have the monthly additional confirmation. What are you going to be looking for? Price to come back to here eventually.
Mhm.
That's the high of the order block.
Yeah.
Then if it goes past the high, you're looking for it to come to the middle of the order block, right?
Mhm.
What do you have near the high of the order block? The 618. What do you have near the middle of the order block? The 70% of this whole move.
Mhm.
Then what do you have once you get near the low? The 786. And then what do you have after that? The monthly opening price.
Yes.
Entry, 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 right?
Yeah.
All along this area right here. So if this does make an up move, this is where we're going to be looking for it, right? Because this is what's already given us like pre-existing swings, right?
Mhm.
That's how you can manage your trade. That's how you can get into the longer term trades. That's how you can see and forecast where we could potentially go, right?
Yeah.
Everything happens around these levels, right? And you have to think about it like the analysts do, right? They typically don't pay attention to minute by minute charts, the 1 minute, the 5 minute, the 15 minute. They start focusing on the hour and above, right? Because they want to know during a day, when does price turn negative? When does price turn positive? After they see that, they're going to want to focus on the weekly. When does price turn week negative for the week? Or when does price turn positive for the week, right? And you'll hear them say this, like while you trading, listen to CNBC or Bloomberg or something like that. You'll hear them say Dow negative for the day, Dow turns positive for the day, Dow up 6% today or 1% today, or Dow took his biggest move and is down 5% today. You know, that's what you're gonna always hear because the institutions and the analysts are focusing on those numbers.
Okay.
So when you see price near a monthly,
Mhm.
always know there's going to be a move off of it.
Yeah.
When you see price near a daily or weekly, always know there's going to be a move off of one of those prices, whether it's a buy or a sell, whether it's going to be a reversal or a continuation,
Mhm.
whether you're going to get new structure form right there and we consolidate near these levels, it's going to be a move or something around these levels. And Also, there's typically going to be an order block near these levels because this is where the banks are trying to get in their trades at these levels. Okay,
Yeah.
got it?
Yeah. Got it. Thank you. Actually, before that, I was working only on Fibs. Then I started to work on order block. So now I try to combine everything, right? So then sometime what happens, there is too many things to consider.
Yeah,
So I get confused. Okay, what should I do now? Where exactly what should I see? Right?
yeah,
So, yesterday I got confused a little bit. That's why I asked this question. But now I'm clear. Thank you
yeah,
so much.
yeah. It should kind of go like this.
Mm-hmm.
Get your structure, find the impulse moves, right? Where is the impulse? The big down move, the big up moves, right?
Yeah.
Then where are your opening prices? Monthly, daily, weekly. Then where are your order blocks? It should be an order block near the monthly, it should be an order block near the weekly, and there's probably going to be an order block on a smaller time frame near the daily, right?
Mm-hmm.
Here's your order block near the monthly. Here's
Mm-hmm.
your order block near the monthly. Here's your order block near the monthly, right?
Mhm. So,
Now,
for structure, I should consider that for higher time frame. Like if I'm doing on 4 hour, so structure should be on 4 hour, right?
it should be structured near the 4 hour, 1 hour daily. It's going to be structured near every one of these levels,
Okay,
every one, right?
all time frame.
Yeah.
Okay.
And right, this was last week's opening price, right? To the ninth.
Mhm.
Structure near the weekly opening, right here.
Yeah.
Structure near the weekly opening. There has to be a decision that's made near these areas. There's gonna always be a major decision
Yeah.
by the institutions made near these areas, right? Every single week, every single month, every single day, there's
Mhm.
gonna be a major decision. So we had order block here, here, here. Here's the weekly opening price right here. That's an order block right here.
Mhm. Yeah.
Price return to it. That's another order block right here.
Mhm.
Price return to it. Now, if we have another move, it should come around this area or near the high or near the low for the week. That's how you got to look at it.
Mhm.
Okay.
Yeah, got it. Thank you.
All right. Trading view. So,
One more question.
okay.
So, in morning time, we were talking about that swing trade, right? For a
Mhm.
small account. So I do some same thing, but sometimes like when I am doing that trailing stop and means I got stopped, right? So should after that should I consider that again or that trade is gone?
It
Because
just
sometimes,
depends.
huh?
It
Sorry.
just depends. So, this trade that I got in was down here around 42.96, right?
Mm-hmm.
It's right here. Still in this one, right? And this one, I actually, it took me a couple times to get in, right? Because I tried to get in on these wicks and
Okay.
it took me out a couple times, but I was still comfortable with getting in this trade because what I'll do is I'll put the order in the first time, right?
Mm-hmm.
And I'll put the trade in, and if it goes 100 or so pips and the profit even or like just a small loss, right?
Mm-hmm.
And the way I'll think about it is if I get in this trade and if it doesn't just go from there
Mm-hmm.
and it comes back and it takes me out, I have to say, is it because it's still going or is it because it's not ready?
Okay.
If it's not, if it's still going down, I just let it go, right?
Okay.
Which means that it would have had to close below these wicks, right? That means it's still going, right?
Right.
If I think it's still going to continue, I'm going to take the same approach. I'm going to put in another trade. Once it goes 100 pips in the profit or 50 pips in the profit, if it comes back, that means it wasn't ready, right?
Right.
And if it take me out, it take me out. I would have had a small loss and I go on about my day. But if it's ready to go, like this one that I'm in now, it's not coming back no time soon,
Yeah.
right?
Yeah.
Not coming back no time soon at all.
Mm-hmm.
I don't even have to think about this, right? Because once it made this move, took out this high right here and returned back to this order block, we haven't seen price come back down here yet,
Right.
right?
Yeah. I can see.
And that's how you gotta look at it.
Yeah. I'm trying to do that, but sometimes I get stopped by a trailing stop. So now I have to. Actually, I'm working on that for with the small lots and doing
Mhm.
practice for that. Let's see.
Yeah.
Yeah. Thank you.
Once you recognize that you're trading off the order block, like this little area right here,
Mhm.
this was trading off of this order block right here. You know you good.
Mm.
Know you good, right?
Right. Right.
You don't have to worry about trailing stop. You just gotta look for all your targets to get hit.
Mhm.
And that's how you want to kind of take approach on that.
Okay. I will
Um,
think. Mhm.
no problem.
Thank you.
Hey, Corey,
Yep.
real briefly, that area where you just talked about those wicks, when you get in because you know it's gonna, you feel as like it's gonna be going, and the only way you know it's not going down, like you said, it has to close below those wicks. And like you said, if you take a small loss and you get back in, you keep getting wicked up. That was what I was talking about earlier today, how it was doing me. I was like, man, right? And then today with US 30, when it came up and hit that order block from way back in May 10th, and just drop it, kind of made up for those few times. So how do you reconcile that mentally with taking those little small losses, and realizing that it just wasn't ready?
They're small losses.
Yeah,
That's how you reconcile.
gotcha.
You those are that's a part of the game. You know what I'm saying? It's a part of what you got to deal with as a trader, right? Is like it's been said, you either want to have one of four things: small loss, break even, small win, or big win. One of those. If you take any of those, you had a good day of trading.
Awesome.
You have a good day of trading. There should be no tie. If any of those happen, you should have no emotional ties to that trade. You shouldn't even start thinking that you did anything unless you take a big loss. There should be no thought to those trades at all. Because if any of those happen, you apply every rule that you should to your setup, and everything that you did was right. Got it?
Got it. That's what I need. Beautiful. Thank you,
Like,
brother.
you should literally be able to say, all right, I've just put a trade in. It did not meet my requirements, right? I just took a small loss or I broke even, right? Analyze it. Is it still doing what I think it's going to do? Yes or no? Yes, cool. Enter another trade, right? Did it go do what I wanted to do? No, it came back, broke me out, break even. All right, analyze. Is this continuing in the direction or is this reversing? Yes, no. It's reversing, cool. Enter my trade again. Is it meeting my setup? Right, cool. Bam, I'm entering my trade again. Right, I didn't take a small loss on any of those. I either broke even or I took a small win or I took a small loss. Just like today, when we got in this trade, it looked like it was going to come back up and take us out, right? And I told y'all, if we're looking at it on a 15-minute, right? I told y'all when it came back up here, I was like, my stop loss is right above this wick. If I lose this, I don't care. That's only a trade. If it had came back up, hit my stop loss, that was a 9-pip loss. I can do that every day. If I'm gonna be willing to take a trade that's 9-pip stop loss to gain a trade that went 242 pips, right?
Yep.
It's more important for me to take a scratch if I know that this potential trade could go 240 some pips, 250 pips. It don't even phase me, right?
Right.
Because I'm looking at the bigger picture, right?
Right. Mm-hmm.
That's how you gotta look at that.
Real quick, Corey. Kim gave out a trade that was stating enter on the projection of the entry price. And I got a little twisted trying to figure out exactly where that's at. Would you mind covering that, please?
This was on Gold Cup
I think it was on Gold Cup on SPX this morning.
this morning. Hold on. I don't know what's going on. Let me see some. I was black. Paid my bill. Like, what's going on? I'll look at that later. Let me just go to this. The chat cleared? Oh, dang. Okay. Let me see. See if I can find it. Okay, so the entry was 43.82. All right, and sell break 43.82. All right, let's go 1 hour. Sell break 40. So what was the question again, Jamal?
She said enter on the rejection of the entry price. I just wanted some clarification versus my own analysis of exactly what that means.
Oh, Okay, so price had closed below 43.82. Was it 43.82? What was it again?
Yeah, 43.82.
Yeah, that was at 43.82.
82, right? Okay.
Yeah.
So what she was saying was on the 15-minute that this candle broke and closed our entry price right here on this candle right here. And then on this candle right here, look for price to break and close below and reject our entry price right here. This candle did it right here. And then that was the trade from there, from here to here. That's
Okay,
all.
so that rejection is signified with the wick underneath the entry price, which is 43.82. And you were to wait for that to completely close.
Or reject the entry. You can't wait
Okay.
for it to close because this is the close right here.
Right, and that was the thing. I was just unsure about exactly where to get in.
It would have been when you saw this rejection.
Okay, so I was just gonna have to jump in that. Okay.
Yep.
All right, I got you. Thanks,
This
Bob.
is like textbook of what you want to see right here.
Mhm.
This is the break and close below. This is the price returning, opening up, and then returning to reject the entry price. And you take your entry along this area right here.
Okay, because it's ideal. You would not want that to close above with the bullish candle. It may signify buy.
Exactly.
Okay, I got it.
Exactly. If we was to look at this area right here, same thing, right? Even though this was a little choppier, right? This candle broke and closed the entry again. Then this candle came back up, reject, there's your entry, you sell right there. Got it?
Got it. Solid. Thanks a lot, bro.
Hey, is there any way you can reach out to Kim and tell her that when she sends out that alert, it doesn't show the full chart in the what part of the app is it? Hold on. If you go to the app on the phone,
It's in Gold Cup. You're right. I've noticed that too.
I mean it's super confusing, and I missed a lot of trades like that.
Yeah, because the broker numbers are different, and I did what I mentioned, and I forgot, and so I really rely on that chart to match up the numbers sometimes because they're not accurate.
Exactly, because like right now I'm looking at the one for today, and it's showing something like 43.86. Like I don't know, I have no idea what to even look for on it.
Okay. Send me a screenshot.
I'm about to do that right now.
And like I know someone asked Carlos and Z asked about the how to use TradingView. Quick rundown. Like the main things you want to do with your TradingView setup is, hold on, let me give you a video. Where I go over this same exact thing. This is like a all you need to know TradingView video right here. But a lot of getting to using TradingView is essentially, you know, getting comfortable with your platform, right? You just gotta be in there, right? But the main things you want to use are your horizontal lines, trend lines, horizontal ray, arrows. Those are kind of my favorites, right? Then inside of here, fibs. Inside of here, I like the brush, path, rectangle, ellipses. Those are like, you're not probably going to use all these tools, right? You just want to find the ones that you kind of feel comfortable with, that you're going to be using all the time, right? And then inside of here, I just use the Elliott waves, impulse waves, Elliott's wave, correction wave. Inside of here, the main two things I use are a long position, which is a buy, short position, sell. I don't really use the rest of this. Some people do. And then I use, these main ones across the top. This measuring tool gives you your pip count, zoom, magnify, lock this drawings. Stay in drawing mode, lock your screen so you can lock everything and you don't have to worry about drawing over or moving everything. This tab hides your drawings, hide indicators, hide both of them, then delete, and then your favorite tab. Main thing you want to use, right? Over here, this is your layout. You notice sometimes I have multiple screens. This is where you're gonna find that right here. Like in this window, I have 3 different screens, 3 different setups. NAS, US 30, SPX, right?
How you do that again, Corey? I'm sorry. Where'd you click on?
That's in this window right here.
Cool.
Now, the only thing about that, if you got a free account, you can only have a certain amount of these, right? So you have to understand that, if you got the free account, that's what you're going to do. And then this will let you sync, these windows, right? Then the other icon is the manager layouts, right? If you're going to be sharing your charts, you need to make sure auto save is on and sharing is on. This name right here can be adjusted by renaming. So a lot of you have no name charts, right? This is the icon. This is the option you want to click to rename that, make a copy, or create a new layout right here. Then if you have a paid version, you can create different charts, right? And this load charts shows you the different charts that I have created, right? So I have one that is an indices weekly model. That's this exact one we're looking at right now. Then I have one that's just for S&P. I have one that's just for oil, another one for indices, gold, US 30, NAS 100, how-to session. This is an airline profile. I got different charts for different things. And then I have these that probably need to get deleted, right? And I do that because there may be some different things that I want to see out of these different charts, right? I may want to put some notes that I only want to see on this chart, right? So this is my SPX trade chart right here. This is what I trade off of every day, off of these, right? But I also have this SPX chart right here with a different layout, right? This is one, sometimes I want to check what's going on with the moving averages, right? And I have this what's going on with the 15-minute. This what's going on with the 1 hour or 30-minute right here. I might want to get a quick glance of what's going on with here. This is a 1 hour, what's going on here, 4 hour, and the daily. I can see at a quick glance what's going on at all these different time frames, right? Then I have a chart that I trade gold and silver off of, and I want to compare it to what's going on with the dollar. So I'll always have this layout. Over here, GU and EU, another set of pairs that I trade all the time based off of the dollar. So you can see I'm using these for different reasons. And I am able to see the different layouts because I've created a new chart layout. You can do this with any of the paid versions. With the free versions, you cannot do this, but I'll show you a way you can work around not being able to do that. Right? So this icon is, this will just take everything to full screen. That's nothing special. Let me get out of here. And then this icon, screenshot and save image right here, or whatever you want to do with that. Then this publish, you probably don't need that too much, but if you really want me to show you that, you can just message me. I'll show you what that does. And then this is your watch list, alert, news, data window, hot list, calendar, ideas, public chat, private chat. Yeah. And then streams, other stuff like this. The only other thing over here you might want to use is the object tree, right? Everything you draw it on here, you can find every drawing, right? So if I click on this dollar chart and I want to see every drawing that I made on this, this is where I'll see all that. Or if I click on the GU chart, I want to see every drawing that I made on that, or every indicator or line that I got on there, I can see it in the object tree, right? That's what this one's for. But the main thing I want you to see is the watch list, because you can create different watch lists to manage your charts. If you have a free account, my recommendation to you is to create a new watch list, right? So that if I come to this, right, and let's say, right, I want to be able to analyze SPX, but I also want to be able to have a different one that I trade off of, right? So maybe I want to have SPX open here and here, and I can do that, right? And on one SPX chart, it could look like this, and the other one, it could look like this. Everything I do in this chart is going to save under the purple SPX. Everything I do under, well, everything I do under this chart is going to save as the purple SPX. Everything I do on this chart is going to save as the green SPX. These are different brokers, but, and the numbers are going to be a little different, but the structure is the same, right? That's how you want to kind of look at that. But it gives you the opportunity to analyze it on multiple different charts. So that way you can see like, okay, cool. I got this set up. I need to look for this, or I want to see one on a higher time frame, on a lower time frame, right? That's how you work around this. So you're going to create the watch list, give it a name, add in the symbol, and then you may want to add in multiple symbols for that. So that way you can have different pairs of the same name. And that'll help you work around like having only those different ones. And then this gives you your symbol, easy said, time frames, different candles, type bar, Heikinaishi, regular candle, your indicators, any ones that you have. These are the indicators that I use right here, which I've already got them favorited. So somebody asked me what indicators do I use? These are the ones. You can screenshot this. I always use volume. I don't really use relative strength, RSI. Sometimes this order block works vaguely. It works decent, but I wouldn't like depend on it. Pin bar indicators, I like trading pin bars. ITC kill zone, that's a custom indicator. Wouldn't worry about that. This is one of my favorite, higher high, lower low live. That's what's giving us these zigzags right here and giving us the higher low higher low or the high and high. Day of the week, that's giving me my daily opening. No, this is giving me this one daily, weekly, monthly opens. This giving me my opening prices for the weekly, monthly, and daily. This day of the week, I don't really use this one anymore, but this just highlights what day it is. You know, you don't really need that one. The only other ones that I use are sometimes I want to see uh, sometimes I want to see the EMA, so I have that. But the main indicators that I use are the higher high, higher low, and volumes, session volume. So yeah, that's the answer to that question. So that's TradingView. Start out, biggest tips for starting out. The biggest tip I can give you is as you're starting out, I don't even know if, let me see, is Nancy still on? She might not even still be on. I've been going for so long. Nancy is still on. Biggest tips for starting out is back test, back test, back test. You should have 12 times more back testing hours than you actually do trading hours, right? And it's like Kobe says, right? Or like Hussein Bolt, right? He's trading all these years, all this time just to run for 9 seconds, right? That's how you got to look at it. That's what back testing is. You got to back test all these days, months, weeks, years, just to take one trade until it becomes like secondhand, you know, until it becomes like second nature, right? And you want to do that so because it's basically when you back test, it's basically you taking trades, you know, because you're going through your chart and you're saying, okay, this is an order block, this is an order block. I would have took a trade here. I would have took a trade here. Might have taken a trade here. You're going through, all right? My monthly area right here, this is also an order block. It came down to the high. This is an example of a trade I would have took. Traded down to the outside of this. It held pretty much this area. Traded to this order block. That's another order block. I would have took a trade here. I would have targeted here. Came back. Here's another entry. This is just a quick example of how I would have backtest. Then the other big thing you can do is this replay tool. If you have the paid account, you can replay everything, right? If you have a free account, you can only go to the 1 hour, right? But okay, here you go. You know this is an order block. How is price gonna react here, right? So let's say I'm looking at this area. I want to say, here's my order block. I got my high. Right here. I got my low right here. If price comes to this area, I'm going to look to take a trade off of this area, right? So all week you're saying, how would price react to this? How would I take this entry if price came to this area? I'm going to replay it right here. This will let you play it, right? How does that pan out? How would I react, right? No, bam, right? Gave me 1 week, right? Gave me another wick, right? Will I get, if this right now is a pin bar right here, as of now, this is also a pin bar. So I know given this setup right now, I have a couple opportunities. I can either trade this high or this high. I can say, once I see price push down here, I can automatically say either I take a buy here, or I have a setup for a buy here. Because now I know I've traded down at least to the high. Then I can say my stop loss is the low of this order block, right? What happens next? Pushes up, right? Now, this is what my trade setup looked like. Long position. I took a buy here, stop loss here. I aim to hit here, right? Other trade, I take the buy from here, stop loss initially here. I look to hit here at least, right? Or I trade inside of this wick, right? Maybe I want to trade this wick right here, right? Still same setup, right? So now I'm looking at, okay, I'm in this trade. We've gone up at least 100 pips. My stop loss is at break even, right? We're going to let this play. What happens? Target hit. So now I just took how many trades? 1, 2, 3 different trades without blowing my account, without stressing. I see exactly how this played out, right? You need to be in the mindset of doing this, right? All the time, right? All the time. Now, is this order block still valid, right? So we're going to let this play. Do I have another setup off of this trade? Same trade, right? We know this area has done this, right? Bam. It came back to it. I could take the same approach, right? I could enter at the high. I'm at least trying to get here, right? But I want to know where could this go? So here is my low. This is my high. Change this. I know now, seeing this, it's reacting to 618. It already reacted to that. It reacted to the 70%. And now it's reacting to 78%. So now my goal again, first get to 0, then -27, then 618, right? So we're gonna let this play out. All right, Chrissy. It wicked the low, right? But does it close below? It doesn't. I can stay in this trade. Pause this, right? Here's another trade. This is the one I'm in now, right? I'm at least trying to get to 0. Here's another trade off of this order block, right? Traded at the high of the order block. Stop loss here. At least trying to get to 0, right? Let this play. Do I hit my target? Target hit, right? And now that I know I'm at 0, right? I'm expecting this to go to 100. And if it doesn't, I'm taking profit along the way, right? Let's let this play out. Next level I'm looking at right here. Boom, that target hit. Next level I'm looking at right here. I don't think we hit that yet. Nope. This is where we are right now. So as it stands, right? I just took how many trades? I just took 1, 2, 3, 4, 5, 6 practice trades just to take this one trade I took right here that I'm still in, right? Just took 6 trades just now. Just took 6 different trades. And you got to do that because this is going to let you see how the market will react to certain things that happen over and over and over again in the market. If you want to take like practice breaking retest, like just like Jamal was talking about, what does a breaking retest look like, right? And you want to see how the market reacts to a breaking retest, right? Let's box up some structure and see, right? Let's box that up, right? Let's go to the 15-minute. How many times, right? Okay. Price has been consolidating in this area. So high, low, right? If I was going to trade this, I would say buy the break here, sell the break here. Let's go to our replay tool. Let's put it in this area. What does the break and retest look like, right? This is what I want to know, right? Oops, no. We're going to play. Price is near the high, so now I'm considering break and retest for a buy, right? Let's see if price gives us that. No, right? But here, okay, what does a break and retest look like? Right here. Price break, close below on this candle. Right here. And then on the following candle, here is your entry right here to push down to hit your targets. I got an opportunity right here to take this trade. This is another trade. This would have been my setup for a short entry around here. Stop loss probably above this little area right here. Targets down here, right? That's my trade. So I just took one trade, right? Let's keep going. What else we want to do, right? If we were looking for a rejection, a retest right here, right? We would have noticed right here, this broke and closed above this. So this is an example of what we don't want to trade right here. So let's mark this. We don't want to trade when we see this happen, right? What does it look like when we are retest structure and it does not give us a break and retest? It looks like this. Price came back to the area it sold from, broke above and closed above, and then it retests the area and traded back in the zone. That's what that looked like. So we got one trade, another trade as a no-go, right? And if we had took this trade, we would have got stopped out. Cool. This is another trade right here. Do we take this buy? Right? Stop loss would have been below this low. We would have been looking for a break and close above this high. We got the break and close above. Would this been a successful trade? We would have got stopped out. This one wouldn't have worked. We did get the break and close above, but price wasn't ready to go. So this would have been a stop out, right? And then our sell would have got triggered, right? Would we have taken this trade?
Okay. Can you start right there, please? I see that a lot, and I just wanted to figure that out. The break and close above, but it is showing bearish. How do you know if that's a signal for a buy or not?
Like right here.
Right there.
This one would have been an example of we would have probably got stopped out on this one, because here is the level that would have been our stop loss right here. This did break and close above right here, and you could have got in on this candle or probably on this candle, right? But in this case, we would have had to look at outside factors to see if this was no problem, mistake. We would have had to look at outside factors to see if this was going to be a move that continued to go to the upside. And sometimes it doesn't. Sometimes it just doesn't go, right? This would have been an example of we probably would have got in this and we would have either hit break even or we would have took a loss on this, right? So that's why I always say, like, once it goes 50 pips to 100 pips, which it did, right? If it's not going to go after it goes 50 to 100 pips, you should probably move your stop to break even, or start to move your stop loss up.
Okay. And something I put in my notes next to your sessions is watch out for trading buys on all-time highs. Do you think that's a good idea?
Yep.
Okay.
Yep. And like, if you see a trade that you get into that goes 50 pips to 100 pips and it just doesn't keep going, like, let's say you got in on this candle, right? It went up almost 50 pips or whatever right there, right? From the entry. And I'm talking about from the entry, right? I'm not, if you got in right here and then it rejected and turned around, that's one thing. But from the entry, right? From the entry price that was given out for this trade, it did go 50 pips, right? Because this is where the structure high is right here. This is not, right? You just got a late entry and that's okay. But you want to pay attention to this. But if it's going 50 pips, you move your stop in profit or you move your stop loss up, right? And if the price closes below that, then you know, like, all right, Khalil, yeah, if the price moves below that, then you know you just broke even or you take the loss, right? And that's just how you got to handle that, right?
Yeah. Okay. Thank
you. Yep. This one, break and close right here. Does this go? This would have been the trade set up again. We at least trying to trade back down to here. It went 50 pips. I'm gonna pause this right quick. It came back, gave us the entry. It went 50 pips. This would have at least been a break even, a win to a break even trade at this point. We went at least 50 pips. We went 88 pips. See how far I go. Hit our target. So that would have been another win. So we would have got 2 wins, 1 loss, 1 maybe. Right? So that's 2 wins, right? Now, if we wanted to, we could box this area in right here. High, low. This trade, broken close above, but this got a lot of wicks. So do I want to trade this? Probably not, right? Because at this point, I'm getting wicks, right? So when I see a candle that closed above, but it's got wicks on it, I kind of steer away from those because I don't want to get in and it reject and immediately go down like this did. This would have been another area to trade from though. Down here, I'm either looking for it to break this low or break this high. Right here. It broke and closed below, but what do we got? Wick on this candle. So I'm probably gonna be a little hesitant with that, right? What ended up happening. We did go into profit. And you either got in here or here. Another trade, you at least went 50 pips in the profit. So there's a possibility that you took this and won this trade, or at least broke even on this one, right? At least broke even on that. Buy opportunity. Break and close above. Retest, does this hold? Yep. There go another trade. So this, what you want to do when you are back testing right here. All right. So I know that was a long question on answer. Order blocks, went over that specifically. Pick yourself back up and head in the right after blowing your account. Christine, are you still on? Are you still on? I'll answer the question anyway, so it's on the video. How do you recover from blowing your account? You have to look at this is one of those chances where you have to look at the flowers. You got to look at the petals. Now you got to look at the rose. This is when you got to look at your vision board and not look at your dirt. You can't look at the dirt right now. You got to look at the vision board, because this is now you got to start thinking about your why. You got to start thinking about what your goals are. You got to start looking and digging down deep into you, like to say, like, if I don't keep going, I don't get to get those things, right? And you just got to figure out, why did you blow your account? You got to figure out, was it that I was not taking the right lot sizes and over leveraging my account? Was it how I was reading the charts? Was it a technical issue? Was I closing out my trade too early? You just got to figure out why you blew your account. Like, what were the reasons that you blew your account, right? And you just got to look at the bigger picture. And this is the case when you look at, like I said, you look at the higher, you look at the vision board. This is when you need your vision board. And then you have to look at adding whatever that was to the dirt list and see how I can take this as like, I don't know if y'all saw the documentary on Michael Jordan, right? The ESPN 30 for 30 on Michael Jordan. What was it? What was the name of it? I know one of y'all know. One of y'all know.
I don't.
One of my guys know the name of the Jordan. Come on now. Oh my God. Nobody?
You're talking about the Last Dance?
The Last Dance. Yeah.
Okay. All right.
Right. And in The Last Dance, one of the memes that came out of it was every time Jordan, he fueled himself, right? And he took that personal, right? Everything, like that meme was going around. Like I can look that up right now. Jordan meme. Like literally, there's a meme that's going on, right? From The Last Dance where he would like create like antagonists, right? He would like take anything that somebody did to him, even if it wasn't even that bad, right? And he used that to fuel him, right? That's what you got to do, right? So, okay, I lost that trade, and I took that personally, right? So now you got to say, okay, I got to go and figure out how I can just destroy the charts the next time I get on it, or the next account that I open up, I got to go and like grow that like 80 million times before, better than the last one. That's how you got to do it. And I took that personally. That's how you got to do it. Like this needs to be one of your slogans, right? And I took that personally. That's got to be one of your slogans, right? All right, let me see if I can find a video clip. Let me see real quick. I just want to just go.
Congratulations, Cole.
Look.
The biggest motivating factor going into that series for you. Come on, get MVP.
Like, do you see that? Like this was there's nothing wrong with Karl Malone getting the MVP, right? But for him, he felt like he should have won that. Just like you may feel like you should have a $10,000 account, but you blew it. You got to take that personally, right? It's the same thing.
1996-97 NBA Most Valuable Player.
So we knew immediately where this was going.
I'm not saying he wasn't deserving of it. All I'm saying is that fueled fire and said, okay, you think he's the MVP? Okay, fine, no problem.
Like that's, you know,
What's the biggest motivating factor?
What do you say? I took it personally, you know. I took it personally. That's how you gotta look at it.
It became personal with me.
Everything, you know what I'm saying? Like that's essentially how you gotta approach it. So cool. Answer that. How big should your account be? Naomi, you still on? How big should your account be to trade indices? You can trade indices. I would say if you're going to trade indices, I would say at least, 500 to 1,000. And I say that because anything less, unless you know how to trade already, you won't be able to do partials. I think if you trade indices, you need to be able to do partials, right? And if you trade indices on certain brokers, you can only do like the smallest lot size is like, the lot size may be an issue with you taking partials, right? And that's kind of why I always want people to trade SPX, because even with a small account, you can trade indices with a small account and take partials with that. Like, so that's kind of the quickest answer I can give you, right? But at least $500. So that way you can take partials. You can take partials with up to a $200 account, a minimum of $200 account, because you would be doing 0.01 and at most 0.02. So you would be able to take one partial off of that when you trade in SPX, but at least 500. That way, you know that you can govern your account properly, right? And 500 because you can take multiple partials on that account, but you still need to use proper risk management. So the way you got to look at it, like if I'm using a $500 account, at most I need to risk 5%. So if I take a loss on my trade on a $500 account, I don't need to lose more than $25 anytime I take a loss, right? And that's how you kind of keep that from blowing your account.
Thanks.
No problem. I think I answered this already, but I'll just do a quick answer on that because we are running long. But sell on SPX. How do I know if I can stay in it longer? Right? Our entry was 86. Yep. We went here, right? Okay. So one thing about when you're getting in the trade, the way we see it is you got to understand where we're getting in, right? We're getting in at a high, right? So when I see rejection, I see that a low got made right here. I see my entry right here. Then I see another low. I know that once I made this low, came back, retested, and then it was taken out, that's a sign that I can stay in this trade longer. That's one sign. Then when we saw, when we saw another low get taken out right here, break and close below here, what was it, 82? Right here, break and close below this area, that's structure being broken. I know now I can stay in this trade from here because I took out this low, I made a new low, I rejected here, and then I took out this low right here. That's another sign I can stay in this trade longer, right? That's how you can see it from structure. When you add in your fibs, right? This high, this low. If I want to see this from a fib perspective, measure this high, measure this low, right? I had price come down, come back up, retrace. Now I just took out the 0 on this and I made -27 and I made -618 and I made 100, right? That's how I know. When I start seeing that this 0 get taken out, like, so if I got in this trade here, if this was the move and I got inside of this area right here, right? If I got in anywhere in this area, I'm going to be expecting for price to come back down to this level. And once I see price here, if it break and close below there, I'm going to be looking for price to come to here. After it comes here, if I see price keep pushing down to here, that's when I'm going to be like, all right, cool. I should take profit, because I should take at least start taking profits or closing out down here. But I'm going to be expecting it to go down to the 100. That's how you do it with fibs. So those are the main two ways I know, like, when I can see I can stay in longer. And then the last way I know is if I get in at an order block for my weekly, daily, and sometimes 4 hour, and I get in on one of those entries, like right here, and I see that this high is being made and this high gets taken out, it ain't coming back for a while. It ain't coming back for a while. Because once this high, like in the case of this trade that I got in from here at 96, all right, so this the entry. This was a high that got taken out here. Price traded back down to it, and then it took this high out right here. Every time you see a high get taken out in a bullish market, that's a new layer of protection on your trade. So if I'm in right here, I see this high get taken out right here. I see it come back to it and it holds it. That just built a wall for me to stay in the trade, right? Then this high get made, then this high get taken out right here. And then it comes back up and retest it right here and push up to this high. Every time I make a high, show you, this high built the wall. This high built the wall. This high built a wall. And every time it does that, right, this made another high, right? On this blue line, built the wall. It came back and took it out. This high got taken out right here. Price came back to this high right here. It held, right? Price came back down to it again. It held. So I see another high get taken out, another structure get taken out. I get stronger confirmations that I can stay in this trade even longer until I see price come back and take out one of these highs, right? So right now I'm still good to stay in this trade because I still got this high holding up. But if I see this high get taken out, I need to start looking at this to see, is it going to take out this low or this low to go back down to this area right here? That's the best way to do it. So that's 3 ways, and the 3 main ways that you want to do that. Cool?
That's very cool. That should work the same with the downtrend in the market as well, but just kind of inverse.
Yeah. Let me find something that's downtrending.
That's very cool. I like that.
Let's go to dollar, right? Dollar DXY, right? Same approach, right? We're gonna look at the daily. Dollar been downtrending for a while, right? Quite some time. So here, the same approach in the opposite direction, right? This low was made right here. right? Once I see this low taken out, break and close below, we created a new low, right? Now I know if I'm selling this, it has to come back up here. And if it doesn't, I know I'm good. Same thing over here. This low created a wall. Does price break above this? Does it come back up here? No and no. So if I got in the trade anywhere in this area right here, anywhere in this area, I can go all the way back up here, right? At these highs. If I got in up here, I got a wall created right here. It pushed down, make a low, reject at a low. It never trades back above this point. Then finally, it loses momentum. It takes out the lowest low in this consolidation area. This is the lowest low. It take it out right here and creates another low. Price doesn't even come back to that low and trades in this range from this high to this low, right? Inside of here, from this high to this low, right here, this low to this high, price doesn't go anywhere above that high. It take it out. It take this low out right here. Now I know once this low gets taken out and this low got taken out, now I know I got another wall from now this low to this high, right? This is my lowest low. This takes out this low. This takes out this low. Now I get another low here. Got another little small area right here and right here. I don't start, if I got in a trade all the way up here, I don't have to worry about getting out of this trade at all from up here for all the same reasons as before. I don't even have to consider this until we see, okay, we made this low, same thing, made this low. I don't take out a high until I get right here. This is the first time a high get taken out right here. And that's not until we get to this area. So this is the last high that was made right here. We pushed down, made another low. The first time we get a high taken out is right here, that held, right? This is the high. This is the price breaking above that high. This is a new high created. It came back up, retest this, right? Now, this is the new high. This is the low that was made. This high got taken out right here. It made another high, right? Now, that's the only time I got to think about it. And in this case, it's still held, right? If this high still is holding, this high is still holding. These are the last highs that were made.
The way I've been studying, the way I've kind of signified to stay in the trade if the price is underneath the 20 EMA, or if it touches it but it doesn't break above it, just stay in that sell. Do you think that's a good confirmation?
Yeah. I don't necessarily use EMAs for that, but is it a bad thing? No. I mean, whatever it is for you to understand how to stay in the trade, you know, that may work for you. But for me, once I see lows taken out in a bearish market and a new low created, that's all the confirmation I need. Here's a low getting taken out. Here's a new low. I can stay in this trade, right?
That's
unless this low gets taken, unless we get a new low, a new high above this low, I don't need to worry about it, right? All right, same thing, low created, right? High created, low taken out, new low. When I see price trade back up, does it take this old low out? No, I stay in the trade.
That's solid.
Right.
What do you call this strategy?
This is, I don't know what the name of it is.
You gotta make some up for this, bro. This is, you gotta patent this. This is solid.
Yeah, I don't know what the name it is.
Can you send this screenshot, please?
Yep.
Mhm.
Hey, Corey.
Yep.
Can I show you real quick what I was talking about on the Gold Cup app? I can share it on my phone.
Yep.
Huh?
Yep.
All right.
Let me make sure you can share. Okay, go ahead. Yeah, I see it. Okay. Yeah, like I said, just send me that screenshot. Because inside of the Gold Cup app, go to that trade, go to one of the trades and scroll down. There should be a little, she should be able to paste the chart somewhere along this area. So I'll let her know. Just matter of fact, do me a favor and send me the screenshots and then just a note to describe it so that way I can have it in detail so I won't forget. Cool. Okay.
Oh shoot, hold on. Oh yeah. When I hold on, I'm sorry. You hear me better?
Yeah, I can hear you.
I had an echo. When I try to take screenshots on the harmonic scanner itself, it does some janky stuff like that too. So it's probably just the whole IM system for the charts itself. Maybe if she wants to send a TradingView link, that's more cleaner. I mean, that'd be cool.
It's just her because on the Steady app, you can see it.
Okay.
Yeah, on the Steady app, you can see it. And then on the they'll paste their chart and they'll put their link in there. So I know it'll work.
Okay. Or maybe if I don't know if it's the heat of the moment of sending the trade idea out, because I know it happens fast, but I know like for example, the ones that come out earlier, like the ones she sent out like in the middle of the evening or whatever, you can't, there's enough time for people to actually compare the chart to theirs. Because I know when I first started doing Gold Cup in the evening, I think that's why I was losing a lot of money. I had no idea what was going on with as far as marking up. I thought the candles were the same and the prices, but that was like months and months ago.
Yeah, yeah.
But I believe it'll help everybody.
Yeah, yeah. That's all it is. Okay, now the last question of the night, which has been crazy because we've been on since 5 o'clock, but that's Chika's question. This is an easy question. I know she ain't even on no more, but I'm gonna answer it anyway. So the question is, does the market always come back to fill imbalances? Must we wait for the IMV? I don't know what the IMV is, but the main question is, does it come back and must we wait? The market does not always immediately fill imbalances. We can see that even on this chart that we are on right now. All right. This imbalance right here didn't get filled completely. It dropped from here made the low, pushed up slightly. There's still imbalances that are left in this move right here that it didn't fill. You will know that it didn't get filled because it didn't come back to this low. That's one sign. Same thing right here. Impulse, retrace, steal some of the imbalance that was left behind. You can go even further. Like, let's look at the weekly, right? This still didn't get filled all the way. This move right here. This is years ago that this move was made. And we didn't completely feel it, right? We can go to, let's see. Look how long it took for this move down and adding on this move from here to here. If we look at this on the monthly, right? From this low to, from this high to this low, this imbalance that was left in between here didn't get filled until 2017. So from the move that started in 2002 to 2008 didn't get filled until 2017, right? So it doesn't have to feel anything. And it may or may not come back to it. Look at SPX, right? Look at the monthly, right? So much imbalance left behind, right? This is years of imbalance that hasn't got filled, right? Years and years. We probably, this right here, this imbalance that got left behind, this move from this low to this high, right? And then from this low to this high, field imbalance from this area right here and right here and right here. This probably don't even happen if we had Corona. If we didn't have Corona, we probably would have never revisited this move right here if we didn't have 2020 happen. But now, look at the imbalance that was left. This low to now this high, right? Are we ever going to see 3,000 again? Right? Are we ever going to see 3289 again? Right? Let's put on the other fibs, default fibs, right? Are we ever going to see 3206, 3289, 3552 again? Or did we just leave an imbalance that's never going to get filled? Let's look at this leg from this low to now this high, right? Are we ever going to come back to 36, 38, 39? Who knows, right? Who knows? This may or may not ever get filled, right? We don't know. And if it does, it may be a long time before that happens. But you know right now, what do we got right here? What do we got right here? Order block. Right? So what do we know? If it does come back to 3,400, what are we going to
stop
do?
and reject right there.
It
Maybe.
should. Yep. On a monthly basis, we need to be looking for a trade at 3,400. If it keeps going down, but it holds 29, 27.90, what are we going to do?
Look for it to reject again right there and go up.
If it holds 21.79, which is the low of the order block, what are we going to do?
Go put our life and our house and our marriage on the line and get everything going back up.
Exactly. This is when you take your 401k out and like you say, okay, cool, I'm about to put my 401k in the SPX right now. And you go on and buy that thing. As long as you see a reason for it to turn back around. You can even look at this little area, this order block right here. What you gonna do? 39, 35.90, which basically is 3,600. 33.94, which is basically 3,400. 31.95, which is basically 3,200. Price come back down to this area. And then even this area, if we look at this field, right? We got 50% right there. Order block. This is like all reasons for you to buy. So, yep, that's what you want to look at. That's what you want to look at. That's what happens with imbalances. Yes, they do feel. Sometimes they don't. Sometimes they never do. Sometimes it takes days, minutes, or years. And that was the last question.
Hey Corey, one more question. In regards to order blocks.
Okay.
Are they like a retest of a break of a structure?
Sometimes.
Okay, that's what those candles look like a broke and then a retested series of bearish candles.
Yep. Sometimes they are. But a lot of times you are going to get them and they won't happen at a high or a low, right? It just depends, right? So if we look at this area right here, this is our order block, high, taken out, go, right? For this area, this would be structured, right? But here's the order block right here. It's in the middle of this consolidation, right? In the middle of this consolidation. So we could use this, but this one would be an example of it not being at a high or a low. So sometimes yes, sometimes no. You just always want to pay attention to, if you're in a bullish market like this is, you see a high got made, you see the down move. Once you see the high get taken out, and then you see another high get made, look for it to come back to it and go from there.
Like a pullback?
Yep.
Okay.
Yep.
Thank you.
No problem. All right. All right. All right. All right. That was the how-to session. And I will go ahead and drop the link for you guys that are still on. Let me go ahead and end this. Shout out to you guys for staying on this long.
Hey, we appreciate you, bro. That was the best how-to session so far. You killed the charts this morning, bro. We definitely cashed out. I appreciate you.
Yeah, thanks to you. Just because of you.
These were the questions. And let me...
My bad, Corey. I don't know if you called me by any chance on the meeting. Had Trees called me in the middle of the call.
Nope.
All right, cool. Make sure I ain't miss out on none.
Unlisted. How-to session for this date. Let me save this.
Corey,
Yep.
will you send me the link? Because I won't get a chance to copy it because I'm walking now with groceries. Okay.
Are you going to have training for your team this week, Corey?
For say what?
Are you going to have training for your team this week?
Team meeting? Normally that's Tuesday, and I missed it because I was traveling. I might do a makeup. It just depends. Just depends. But if not, it's Tuesday. It's Tuesday. So
Okay.
So just send me a message and I'll send you the link for it.
Sure. Thank you.
Okay.
Okay, let me know next time you try to climb up. I'm there like 3 times a week.
Okay, cool beans, man.
Appreciate it. Have a good evening.
All right, man. You guys have a good night. I will catch y'all next week, probably.
Thanks, Corey.
All right.
All right, brother man.
Later.
Yes, sir. All right, everybody.
Thank you.
Send you the link.
All right, Chen.